Good afternoon, everybody. I'd like to welcome you to the Corporate Services Committee and to acknowledge that we're on the territory of the Coast Salish people. I'd also like to take a moment and welcome alternate Director Sandhu and Justice and McNeil, who are here with us today. And I'm sure you'll get to know them a bit over the break and dinner. So, Mr. Barry, item number 1, approval of agenda. Any additions?
No, that's it as presented, Madam Chair.
I have a motion to approve the agenda. Moved, seconded. Any opposed? That carries. And adoption of minutes. Would you like me to read them out, Mr. Barry, or would you like to read them?
I'll read them if you would like.
That would be nice.
So we have a number of minutes here. The first set, the minutes from the Corporate Services Committee meeting of September the 6th.
Anyone? Moved and seconded. All in favor? Opposed? Motion carried.
M2, the Special Corporate Services Committee meeting minutes of December 12th.
Anyone like to move those? Moved, seconded. Any errors or omissions? All in favor? Opposed? It's carried.
Next set, the Special Corporate Services Committee meeting minutes of January the 9th.
Moved. Is there a seconder? Thank you. All in favor? Opposed? Carried.
M4, Special Corporate Services Committee meeting minutes of January 31st.
Moved by Director Acton, seconded by Director Sandhu. Any errors or omissions? All in favor? Opposed? Carried.
And the final set, the Special Corporate Services Committee meeting minutes of March 13th.
Moved by second. All in favor? Opposed? So we've moved through the marathon of minutes. Business arising, Mr. Barry, any?
No business arising?
So now is the opportunity if anyone in the public would like to speak to the board. We're happy to hear from the public. We allow 15 minutes, 3 minutes each, and you need to speak on something that's on the agenda. No takers today. Okay, and there's no delegations? No correspondence?
Delegations.
No information? So we'll go to our first report, and I'd like to welcome up Christine Simpson from BDO Canada, the auditor, to take us through the audit. Welcome.
Is that on?
Yes.
It's working? Okay. Just going to slide this over. I believe you have it, the report in your packages.
We do.
It's a nice pretty picture on the front. I'm just going to walk you through that if you like.
Thank you.
Sort of a sentence each page and give you the highlights if that works for the committee. A little bit up? Okay, perfect. So starting on page 1, first off, I want to thank management. I think we're here a whole month earlier than last year, so we're in good shape. As you know, the deadline is May 15th, so once we've gone through this stage, it will be going to the board for final approval and then go to the ministry. I'm going to skip over to page 3, just give you a status of the audit. Typical at this stage, we're just doing a little bit of cleanup. We are following up on a few confirmations. And one letter that we need to get is called a management representation letter. Did I do that? Or just, okay. And that management representation letter cannot be signed until the board signs the audit, or signs off on the audit. So that's outstanding purely because of timing. It has to be signed at the same time. We also, at that same time, have to do what we call subsequent events procedures. We just have to make sure nothing's happened since we finished our field work that needs to be updated in the statements. So nothing that I expect at this time, but just to let you know that. A reminder that we're following generally accepted auditing standards, and we're following public sector accounting standards in preparation of the financial statements. On that same page, there's references to materiality, and you'll note that there's 2 different sections. First off being the regional district, and the materiality is about 1.2 million, and the hospital district at about 200,000. Those are the global figures. We actually report on any differences much smaller than that. So you'll see in the far right column, there's 2 reporting thresholds. So any differences that are uncovered during the audit of about 60,000 are reported to for the regional district and $9,700 for the hospital district. Below that, you'll note that because the size of your capital is very large, we actually use a different threshold for capital testing, and that materiality is almost 300,000, and about 150,000 of any reporting differences will come to the committee. So those are anything that are fixed during the audit or are left remaining outstanding if we felt that there was a disagreement or we couldn't come to a conclusion on a matter. So I'm going to jump to the following page. Sorry, I'm having trouble with these lights saying.
So to page 4?
Yes, please. And first off on that page, I'd like to remind everybody that we do some review of internal controls, but we do what we call a combined audit. So we'll look at internal controls or we'll look at substantive procedures, whatever's the most efficient method. So there is sometimes a presumption that we look at all internal controls and all processes. We don't. We choose whether or not a controls approach or a substantive approach is the most efficient way to do the audit. So I just want to remind everybody of that. Similarly, as we're going through those processes, if we identify any potential improvements to be made to internal controls or potential efficiencies that we note during the audit, we'll bring those to your attention, and we have a supplemental letter at the end that we'll go through in a minute. The following page portion on there is independence. So this is really a confirmation that BDO is not doing any services that put us in a position where we're signing off our own work or we're providing services that would be in conflict for the audit. So there's nothing to report to you in that way. I'm going to skip adjusted differences because there is a schedule further on in the letter that we can walk through. On page 5, I believe it is the management representation. It talks about the management representation letter. So this is the letter I mentioned that management will sign at the same time the board signs off on the statements. It essentially is a letter that confirms that they've given us all the information we need to do the audit. They've given us full access to the staff, access to yourself to have this discussion today. So we have all the necessary information to do an effective audit. Significant audit estimates. This is really highlighting to you that the focus of our audit will be around areas where there's estimates, where there's complicated accounting standards, judgment. Those are all areas where there's more potential for there to be an error or a misstatement or an adjustment to manipulate the figures. So we put more attention to those areas. So just highlighting that to you. On the following side of that page, it just highlights that there was a few new standards that came into effect this year. I'm going to highlight that most of them are disclosure standards. And in practice, I would say most cases people were already applying these. These were good disclosures that people were applying, but now they've just been written into the standards requiring people to disclose these things. So things like related party transactions were typically being reported, but now it's written into the standards that they have to be reported. With respect to fraud discussion, again, I want to remind everybody that this is not a fraud-focused audit. It's really around ensuring we believe the financial statements are not materially misstated. So we do some limited procedures around fraud, but that's not the primary focus of this type of audit. If I uncover anything that is fraud or potentially fraud or causes me concern, I have a duty to bring it to the committee. I have nothing to bring to your attention. If in reverse, if the committee had any concerns after this discussion or during this discussion, they would bring them to me. I would review those before we signed off on the audit. So if there was something of material concern, we would look into that before we signed off the audit. I'm going to follow next page, page 6. I'm just going to walk you through some of the areas that we pay more attention to during the audit because there's potential risk for error or they're more complicated areas. The first one actually is an area that we're required to look at. Management override of control. So this is the concept that you could have a good team of staff, lots of internal control, separation of duties that are being executed throughout the year. But there's always a risk at year end that management makes adjustments to get certain results, to meet budget, to make sure certain segments look better than others. So we always look at items like manual journal entries at year end or accruals at year end, just to make sure that there is a valid business reason for them, not purely to manipulate an end result. So nothing to bring to your attention there, just to highlight that that is something that we do and we spend some time on.
Thank you.
On the following page, page 7, grant and revenue recognition. This is quite a significant area for any municipality or regional district because every grant agreement is different. So the devil's in the details for us here. And it's really about not focusing on when the cash is received, but when have you earned that revenue? When have you performed the services, acquired a capital asset, built a capital asset? So the revenue needs to be recognized when you meet the stipulations within that agreement, and every agreement is different. So this does take quite a bit of time during our audit process. So nothing to bring to your attention there, but to highlight the complexities there and the time that's spent on that. On the following page, page 8, staff salaries. Obviously a very significant cost to the organization. So we do spend time looking at controls around salaries and benefits, additions to staff, terminations of staff, and more importantly, the benefits of making sure they're accrued at year end. So we do put quite a bit of time around that, as well as looking at the allocation to the different segments and departments to make sure that that's consistently applied and not, again, as I said, manipulating figures between different areas. The next area here is contaminated sites. So the rules, accounting rules, essentially say that if you have exceeded an environmental standard and you have an obligation to a third party, or a third party can force you to do some sort of cleanup, you are required to do an accrual based on what it will cost to clean up that site and or monitor in the future. So we do spend some time there to make sure that those are appropriately recorded. On page 9, I will highlight to you that with respect to cash, just given the volume and the size, we do look at reconciliations and confirmations with third parties to ensure that they all exist and are appropriately recorded. So page 10, probably the most complicated area, so I'll spend a couple minutes here. This is landfill post-closure and, closure and post-closure liabilities. So similar to contaminated sites, you are required to record a liability for the cost of closing a landfill and any cost of monitoring after the closure is done. So you'll note on the right there, we did do some work, quite a bit of work around this year because of the site that was closed. The costs were all appropriately tracked towards that project. But what we had to do is separate what was the cleaning up of the old site versus the new recycling center that was built. So any of the cleanup costs had been previously accrued, I think, 4 years ago. So we had to separate those against that accrual that was previously set up versus the capital items moving forward. So because of that, there was $587,000 that was attributed to the prior accrual. So that the capital may look smaller than you expected, but that's purely because we had actually recorded that cost a few years ago when we knew we had to clean up the site. The second adjustment there is an additional $487,000 had originally been recorded. It's really the amount that's going to be spent next year. It just hadn't been spent yet. So we back that out until it gets spent next year.
Okay.
So we also looked at the disclosures to make sure they adequately described this transaction and what happened and the estimates involved, because there are significant amounts of dollars for the monitoring of these sites as well. So we made sure that that disclosure was as comprehensive as possible. Page 11, internal control matters. I am required to report to you if there are any significant deficiencies in internal controls that made us have to change our approach. So if we had a planned approach, we were going to rely on certain controls and they didn't exist or weren't operating effectively, we would have to change our approach and report that to you, and I have nothing to report to you. So everything was operating appropriately. Page 12 and 13 really is just a checklist for you to understand as overseeing the audit process what areas you are responsible for understanding or being knowledgeable about. And this letter, and as well as the letter that we issued at our planning stage, really cover all those topics, so that gives you assurance that I've had discussions with you about all the topics that you're responsible for. I'm going to skip over to page 14 and 15. So essentially, this is the audit opinion. So the statements, I'll remind you, are the responsibility of management. They're responsible for the numbers, preparing those statements, ensuring that all the information for the notes are comprehensive and together, and provided to us. We actually only own these 2 pages, which is the audit opinion. What I will highlight to you, if you compare this to last year, is it's probably twice as long as what you saw last year. But that really is a function of just explaining the process better. So we found the auditing profession has found that people don't understand what a financial statement audit is, what is done and what's not done, who's responsible for what. And so we have been required this year to have a much more extensive report, although the work hasn't changed. It's just more clarity of what we do and what we don't do, so everybody can understand that. So that's just trying to be a little bit more transparent. So there is a second audit report for the hospital district, simply just a different name, all the same language in there. So I'm going to skip over to page 18. So the first table there really is highlighting some of the adjustments that were made in the audit. The first one is simply a balance sheet reclass between cash and accounts payable. So these were some EFT transactions that were prepared, that were issued in January, but were accidentally put into December. So it was just a timing of when those were released from the system. And so we just backed that out to put them back into cash and back into accounts payable. So no impact on your surplus there. The second item, as I mentioned previously, this was the carryover costs of the recycling center, $487,000 that was going to be spent in 2019. So we've just adjusted that so it could get recorded in 2019 in the proper period. And the third item, as I mentioned, was the remediation of the landfill, the actual portion that was expensed a few years ago. We just had to adjust that portion back because it had already been accrued and expensed previously. So the cash went out this year, but the cost got accrued previously when we knew we had to clean up the site. So the net impact on your surplus was $99,000, so not very material given the significance and the complicated nature of some of these adjustments. On the hospital district, we did have one adjustment, so there were some costs associated with the planning of the new project. Because of the nature of planning costs, it's very hard to say that for sure they will have a future benefit. There is always the chance that the project won't go ahead. There's nothing you could do with those planning costs. You can't necessarily sell them. So they don't meet the accounting requirements for capitalizing, so they had to be expensed. So we put those through as an expense. So valid costs, they will go against your contribution requirements, but they don't meet the accounting standards for capitalization.
Will they meet them if the hospital becomes built later? Or
Typically not. You typically don't go backwards.
Okay, thank you.
Yeah. And I'm going to just jump over to Appendix C. This is called our representation letter. So this is what management will sign when the board approves the statements. It's a standard letter. There's nothing significant in there that I need to bring to your attention. And as I mentioned, it just gives us confirmation that we had full access to all the staff and records. So there are 2 letters, one for the hospital district as well. So I'm going to jump over to page 23, being the management letter. So this, we call it a management letter. It essentially is anything that we highlight during the audit that we think potentially could be improved. So I wouldn't say this is all the problems in the world. This may also just be suggestions and things we note along the way. They could be items for efficiency, and we try to add our value here based on our knowledge from other clients as well. But we also bring forward these suggestions from previous years so you can see if they've been resolved or not, or if they're even relevant in the current year. As you know, last year there was a conversion from class to legend. There were some differences between the accounts on the conversion and some documentation recommendations that we made. So this is really, you cannot go back and fix this, but these are recommendations for the next time you have a system conversion around documentation and reconciliation. So nothing to bring to your attention this year because everything's done and we haven't done any system conversions this year. The second item there, we noted that there was not a policy as to whether or not to capitalize interest on projects. This is a choice under public sector accounting standards, so it was just a suggestion to confirm your approach, whether you felt that it was appropriate to capitalize interest if you were to borrow to finance a project. So it is, there's not a right or wrong answer in public sector standards, but we just felt it was a good practice to document your policy. During the current year, we did have our IT specialists involved. We did note that there is no regular scheduled review of the rights to the system, so just making sure that the appropriate people are there and have the appropriate rights. We do believe if you got long-term employees that every once in a while you should have a review to make sure that there's nothing incorrect or hasn't been inappropriately added. As well, as I mentioned previously, with respect to grants, there's a lot of grants, a lot of reporting requirements, and they're all different. We do think it's a good idea to put into place some sort of tracking system so they're all in one place. You can keep track of them. What are the reporting deadlines? Are there any audit deadlines? Any repayments, etc. So more of a formalized, centralized repository for these, so you have them. As well, the third item, I would say a lot of my larger clients like this, when you have a lot of staff and you've got engineering versus finance, you have to have a lot of integration of people. I think when you're doing larger projects, it may help to have a bit more of a coordinated approach of how to track and report information back and forth to make sure that everything's picked up, and to make sure that both sides understand the accounting versus the engineering. So how do things get treated, as I mentioned, expense versus capital, and when are they monitored and where we're at? Is it in use, is it not in use? So a little bit more coordination between the two areas there on tracking these things and reviewing them. So just ideas and suggestions for improvements, nothing significant to bring to your attention. But I'm happy to answer any questions.
Thank you very much, Ms. Simpson. That was very comprehensive, and I appreciated the chart where you referenced the appendices and when we could find everything. It made it a lot easier to read this year.
Thank you.
Does anyone have any questions? Director Sebring.
Thank you, Madam Chair. I want to go back to the landfill closure and post-closure costs.
What page?
Well, actually, it was referenced in the audit report, but I want to go to the actual draft financial statement to note 12, because it deals with that and drills down a little bit further. And this is more a question for staff than it is for the auditor, but I'm given to understand that the Herd Road landfill, which used to be included in part of the risk assessment for the CVRD, per the Solid Waste Management Plan Amendment Number 3 approved by the Minister in 2007, has now been taken out of those calculations, because we at the municipality have now been told that's our problem. I'm trying to get a handle on that and why that didn't show up in here anywhere specifically. What's actually going on with that?
Sorry, I think you said the
Note 12
Yep.
in the
What
actual
page is note 12 on in that?
There is no.
It should be at the top of your
20.
top right. Thank you.
20 or
And sorry, can you say which one you said, which site? I missed that.
Herd Road.
Herd Road? I don't believe it was ever in here.
We always, at the municipality, always operated on the understanding that it was part of the solid waste management plan for the entire district.
And can I ask the question, as I understand it, sometimes you're responsible for doing the planning, but not necessarily owning and having to actually do the closure. So can I?
That's really what I'm asking.
I'm gonna have to get back to you on that,
Okay.
because if I've started in 2007, so to go back to see if it was ever included as part of.
Because I don't think there's been any amendment since 2007, and certainly in the period between 2007 and this year, the assumption on the North Cowichan side was that this was always part of the solid waste management plan for the regional district. So I'm just trying to figure that out. Mr. Carruthers.
Yeah, if I can. So I think as was mentioned, we're responsible for planning, and we would certainly be considering landfills potentially that are contained within our municipal partners' boundaries. But in terms of actual ownership and liability and responsibility, they would only be our previous incinerator sites, our previous landfills, and there are others that are owned by the municipalities. So I think that's a distinction, planning versus ownership and
But I
operation.
guess that's the question, is was that a municipal landfill, or was that always, or at any time, a regional landfill?
Can't answer that question.
And
Yeah,
that's-
we'd have to look into that.
Okay. If
So
somebody could, I'd
Ms.
appreciate it.
Wayner had her hand up. Would you like to add something?
Through the chair to Director Sebring, back to 2007, it's never been in the regional CVRD's financial statements, and from what I see from that, it was never a regional district landfill, so it was not part of the closure costs, not included in it.
Okay, we're gonna have to have a discussion about that off screen. That's fine. We'll talk.
Does anyone else have any questions? None at all. So I guess we just need a motion to, no? Okay. It sounds like we have some happy directors. Did you have something you want to say?
Yeah, Madam Chair, as the CAO, I would just like to acknowledge our staff. This is probably my 18th, 19th financial statement that I've had delivered as a CAO, and I have to commend the staff for the work that they've done in ensuring that our financial controls are in place and that clearly our books are in good shape, and that's just due diligence, hard work, attention to detail, and good processes. So I want to thank the staff.
Yes. Yes, I echo that. And, okay, so there's a recommendation. Mr. Berry will read it.
Madam Chair, that it be recommended to the board that the BDO Canada LLP's audit results and communication report be received, and that the 2018 financial statements be approved.
That was moved by Director Stone and seconded by Director Smith. Any comments? All in favor? Anyone opposed? That carries. Thank you very much, Ms. Simpson. That was kind of pleasant. Okay, Mr. Berry. Now
Second
we're on
staff
to-
report from the Finance Division regarding the 2020 budget processing calendar. There is a recommendation that it be recommended to the board that the 2020 budget processing calendar, as detailed in the Finance Division's March 29th, 2019 staff report, be approved.
Moved by Director Stone. Is there a seconder? Seconded by Director Yanni DiNardo. Did it. Been practicing. Any, I have. I wake up in the night. Any comments? Director Acton.
The title of this report says schedule and process. So I'm wondering about the process part of it. Are we going to see this again or throughout the calendar of the budget? Are we going to discuss maybe ways that we could improve the budget process for next year? Or, thanks.
Ms. Solder?
So staff did send out an email and asked for any feedback from any board members. We did not receive any feedback from those emails. At a previous meeting, you had mentioned looking at a 2% across the board. You mentioned a meeting that you'd been to at LGLA, and we have been in contact with LGLA. We're trying to get in contact to get information about that presentation, and our plan is to hopefully we'll be able to get something and present that at the June board meeting so that those kind of discussions can continue. This is improvements that staff is suggesting to the overall budget process, not with respect to specific direction on budget.
Thank you. I just want to make sure we'd be talking about it again. Okay. And I believe I sent that responded to that email with
By-
that.
oh.
Thanks.
Anyone else? So, did we have this moved? Have I lost my mind? Okay, all in favor of the motion? Against? Motion carries. Okay, R3, Mr. Berry.
Madam Chair, R3, the report from the Environmental Services Division regarding an interim risk tolerance policy and implementation strategy, with a recommendation that a risk tolerance policy and implementation strategy under the Natural Hazards Disaster and Risk Reduction Strategy be prepared.
Are you moving that, Director Stone? And seconded by Director Acton. Any comments or questions? Wow. Shall I call the question then? All in favor? Opposed? Motion carries. Any unfinished business?
Question period.
Yeah. So now we come to question period. Is there anyone in the gallery who would like to ask a question? Okay. Motion to adjourn. All in favor? None opposed, it looks like. Carried. Well, thank you very much. That was like fastest meeting I've ever chaired.